International travel is not for the faint of heart. Trust me, eating an ice cream cone in Jakarta when it's 97 degrees in a crush of traffic isn't the same as eating an ice cream cone anywhere else. This is a sort of spice, by the way, that can add some meaning to your existence. Likewise, international stocks will add some spice to your investments. Paprika, anyone? Today's audience requested ETF battle is a scuffle between international equity funds from Franklin Templeton and Vanguard. Who wins the battle? Find out right after this. Welcome to ETF Battles. I'm Ron DeLegge, and it's great to see you again. If there's an ETF contest that you'd like us to do, send me your ETF ticker symbols in the comment section below or on our Twitter feed at ETF Guide. We could do double, triple, and quadruple headers. Put on your thinking caps, folks. Send me your best ideas. Now, before we go any further, I'm thrilled to announce ETF Guide has a giveaway contest. Win a $500 deposit directly into your IRA or Roth IRA account. Just imagine the growth potential after compounding. Woo boy! All you have to do is to register your name and email address in the contest page. The link is provided below in the description section. In that same area, you'll also find links to our program judges along with our program sponsor, Direction. Today's ETF contest was sent to us by a viewer named Stolil1, and it's between ticker symbol LVHI from Franklin Templeton facing off against VXUS from Vanguard. Thank you so much, Stolil1, for this excellent contest suggestion. Visit the description section below to claim your prize. You get an ETF Battles coffee mug or short. Judging today's contest is James Seyffart with Bloomberg and Mike Akins with ETF Action. Guys, welcome back. Great to see you again.
Good to be here, Ron. Thanks for having me.
Yeah, happy to do this. Thanks, Ron.
So our four battle categories are cost, exposure, strategy, performance, and mystery. For mystery, that's where our judges can choose any factor or thing that they feel is crucial to today's contest. Our judges can nominate wildcard ETFs if they think there's a better investment choice elsewhere. They can also opt for split decisions. I'll be keeping score, and at the end of the show, we'll declare an overall winner. Now, keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or the judges. So let's kick things off with the first category, cost. James, please get us started.
Yeah, I mean, this one is pretty black and white as far as I'm concerned. You have the Vanguard option, which is under 10 bips, but we have it at seven basis points compared to LVHI, which we have at about 40 basis points. So VXUS from Vanguard, and Vanguard, knowing their name, obviously they're going to be cheaper. So they are the winner here as far as cost goes.
Mike, you're up next. How do you see it in terms of cost?
Yeah, I'll just agree with James and move on. It's tough to beat Vanguard in a price battle.
Perfect. Our next category is exposure strategy. And Mike, you're up. So break it down for us.
Yeah, so now we can get into the real battle here, which is the reality that these are not exactly the same types of strategies. They both have international in the name. But as we know in ETF land, names are not exactly, what's in a name is very different sometimes. And in this case, international for LVHI, it refers specifically to developed ex-US securities, and it does not include emerging, where VXUS takes the more traditional look at international and includes both developed ex-US and emerging stocks. So about 25% of VXUS is in emerging countries, and that's a big difference in these two strategies. The second piece that is very different here is LVHI also hedges out its currency risk. So it does not, it has a hedging mechanism to take out the currency risk of the of allocating overseas, and that has been a big proponent to its performance lately. So once you kind of take that aside, then we can get into the strategy itself, which LVHI is going to focus on those low volatility stocks. It's done a good job of that. It does provide a lower beta relative to what I consider its benchmark, being HEFA, which is the EFA index. Currency hedged would be a proper benchmark for LVHI. And VXUS, of course, is a Vanguard product. It's basically the benchmark. So if you think about a benchmarking there, it's going to be ACWX, and it tracks it pretty much perfectly with a little bit of outperformance because of the cost savings. So putting that all together, we don't have basically a apples to apples type comparison here. We have what I'd basically say apples to apple juice maybe. And to that end, we have to say, you have to keep that in context when picking winners and losers. I personally like the traditional aspect of just investing overseas. I think part of investing overseas is having exposure to currency risk. It hasn't helped recently. The dollar has been strong. That's caused underperformance. If you would have hedged, you'd have been better off. But in that context, I give VXUS my winner here. One, simply because it properly names itself. It's an international exposure product. And two, because I generally think that when you're investing overseas, part of investing is also getting that diversification of currency. So I'm going to stick with VXUS, but they're very different. And as we get into performance and risk, I'll talk about LVHI has done a good job providing lower risk relative to its benchmark. But for me, VXUS does a better job of capturing that particular area of the market that I want exposure to.
Apples versus apple juice, or applesauce, or taffy apples. Thank you very much, Mike, for your excellent analysis. That takes us next to James. It's your turn. Give us your take on exposure strategy.
Yeah, I mean, Mike just ran a clinic on how to look at different ways to analyze these funds, but I agree they are very different. Franklin International low vol, like it's a multi-factor fund, right? So you're specifically looking at a multitude of different things, and it holds a way smaller subset of companies, so they're not super comparable. So if you're just looking, I want international exposure, you're really going to go VXUS. If you have a specific inkling because you like the stocks held by the Franklin option LVHI, maybe that's why, or you want smaller stocks, or you want a smaller subset. There's a targeted reason you're going after those names, but VXUS is going to give you way broader coverage. So it depends what you're really going after as an investor. Are you just looking for international exposure, or do you have a specific reason for looking at the low vol version that Franklin is offering? So as far as that's concerned, I think for most people, they're looking at this for just general exposure. So if you're advanced, you know what you're doing, you have a specific reason to look at LVHI, it makes sense. But if you're just looking for international exposure, VXUS probably makes the most sense as far as the strategy goes.
That takes us next to performance. And James, you're still up. So give us your analysis of which of these two ETFs stands out.
Yeah, so I mean, if you look at the bottom, I mean, first of all, it has been a low vol index, right? This Franklin International low vol high div index. It didn't go down as much during the 2020, and it didn't pop as much into 2021 and 2022. And then it also didn't fall as much as VXUS did in 2022 and 2023. So if you look since the bottom, VXUS has underperformed LVHI, I should say. So that's the one that if I'm looking at a big time frame, that's where I'm going to look. But you can slice and dice whatever time frame you want to look at. But for the most part, year to date, they're very close. They're very similar in ultimate returns. But again, there's a little bit less vol that you're getting in that LVHI because of the stocks they're picking, and it's a multi-factor ETF, right? They're looking at low vol, they're looking for dividends. It's going to give you a bit of a smoother ride than something like VXUS, which, as Mike went into, is going to hold emerging markets. So I'm going to give it to LVHI in this case on performance.
Mike, you're up next. How do you see it when it comes to performance?
Yes, I got a little different take here. I don't think you can compare these two ETFs from a performance perspective. If I did, LVHI wins, right? But if I compare developed markets to emerging markets over any recent time frame, developed markets win. So that it's not a fair comparison. So I think you have to break it down and say, how do they compare against their benchmark? And on first glance, LVHI crushes EFA, right? So if you think about it from a developed markets perspective, it kills it. But if you then take out that currency hedge and put it as a comparison against HEFA, which is HEFA, it actually underperforms. Now, I will give it a nod that it does so with less risk, right? So that low volatility component, as James articulated, it's done its job. It's a multi-factor strategy trying to provide lower beta, lower risk stocks, and it has accomplished that goal. And if you want to get some international developed market exposure, LVHI checks that box. It's doing what it claims to achieve. However, if you're looking at it from a performance risk perspective trade-off, it does not keep up with what I would consider its proper benchmark. Whereas VXUS, its proper benchmark would be probably the MSCI All Country World XUS index, and it's outperformed that index slightly. It basically is in line with it. They're almost mirror strategies with tracking different but similar indexes. So to that extent, if you compare it to their proper benchmarks, I think VXUS actually has provided a better return structure. With that caveat that I would say, LVHI is achieving a lower beta, and to that end, it may pay off over a longer time frame. We're only looking at 5 years right now, for its track record. But in my mind, and I'll tell you what I did is I took and recreated LVHI to add back in internet emerging exposure, and then created a model and compared that to VXUS. And after I did that, what I found is that it underperformed. So to that extent, I have to give my winner to VXUS, because by the time you solve for the variables, what you find is on a true head-to-head battle, VXUS is providing outperformance.
All right. That's insane. You made a model for this battle. Did you use that ETF Action tool? Was that somewhat helpful with building that?
Somewhat. Yes, absolutely. Very easy to build a model of two tickers and recreate and solve for any variances. So that's what I did. But I think it just, we'll get to it here in a second, but I think it's important to understand that there's more to an ETF than just a name.
Sounds good. ETF Action, that's a pretty awesome tool. Thank you, Mike. Next up is the mystery battle category, and this is where our judges can surprise us with that one factor or maybe multiple factors that they feel are crucial to today's showdown. So, Mike, you're up. Give us your mystery battle category. What is it, and which of these ETFs wins it?
Yeah, I've kind of just talked about it the whole way through. I think, my theme for today's mystery is what's in a name, and just understanding the importance of truly reading the documentation, because to Franklin's benefit, if you go and read the fact sheet, or if you go and read their webpage, they're very clear. They're focused on developed ex-US stocks, but international on its own kind of leads you to believe it would be both developed and emerging. So it's important to note you can't just say, oh wow, these two ETFs have very similar names, and we've learned that over and over again with whether it's themes or factors. There is very, each factor or each exposure is in the eye of the beholder. And to that extent, you have to understand how you're going to use an ETF specifically. So if I'm using LVHI, I like that strategy, and it's done a good job using it. I'm also using some sort of specific emerging market strategy so that I'm not completely leaving that out of the equation. Whereas VXUS, it's designed to be a one-stop shop for your full international exposure, and it achieves that. So to that extent, with the theme being what's in a name, I think the Vanguard product is better named as a international stock portfolio. It's the Vanguard Total International Stock ETF, and that's exactly what it is. It owns almost every stock ex-US that is investable and liquid, and so it's properly named in my extent. The Franklin International Volatility, in my opinion, should be the Franklin Developed ex-US Volatility. So for that category, I'm going to stick with my theme of the day, which is tracking your name, and my winner is VXUS.
James, you're up next. Your mystery battle category, what is it, and which of these two ETFs wins it?
Yeah, so I'm going to give you more than one category because there's a few different ways to slice this. The first one is the trading volume. VXUS blows LVHI out of the water when it comes to trading volume, so therefore it has tighter spreads. It's easier to trade. So if that's something that's important to you, that's something to keep in mind. And then the other thing I want to say is, like, we've touched on it and touched around it the whole time. The LVHI is a much smaller subset of the universe that VXUS is. For example, VXUS holds 8,030 different stocks. LVHI holds about 172 based on when I looked today. So you're comparing completely different things here, right? So that means that you end up with the top 10 holdings in LVHI make up 26% of the fund versus 9% for VXUS. So you just have completely different exposures. You also have a much higher average market cap when you have VXUS because it holds those massive names that are international, and LVHI doesn't really hold those. So you're much smaller cap tilted. So Basically, for all those reasons, I lean VXUS just because it's much broader and it trades more and gives you a more adequate exposure to the international markets. But if you're looking for an international market ETF that has lower vol, high div, and a smaller market cap type exposure, then LVHI makes complete sense. But VXUS wins this category for me.
Well, we've arrived at the part of the show where our judges get the chance to give us their overall battle winner, and the analysis on today's program has been absolutely berserk. Berserk in a good way. So, James, your final chance, give us your overall winner.
Yeah, for me, it's not really all that close. VXUS is my winner. I've said everything I need to say to back up my point there. Like I said, there's subset reasons why you might choose LVHI, but for the broader aspect, VXUS wins the battle here.
Mike, your final chance to weigh in with your overall battle winner.
Yeah, I'm with James. My winner is VXUS, but I think I'll use my closing discussion to actually, give some credit where credit's due. And that is, if you think about, Franklin International Low Volatility High Dividend Index, with the exception of that international, the low volatility, its beta to its benchmark is 0.8, check. It does its job. If you think about high dividend, its yield currently of the underlying securities is 6.48%. That of developed ex-US, EFA, is only 3.22%, right? So, it achieves its stated objective, its strategy, its index, its methodology works. So if that's what you're looking for, this is a good strategy. Just for me, positioning, portfolio construction, I like VXUS and its strategy. But LVHI is, it's the understanding of what aligns best with your needs. And if you understand what LVHI is trying to achieve, it does do that. So VXUS is my winner, but I would just want to make sure I clarified that, the strategy of LVHI is achieving what it tells you it will do.
Well, our judges have spoken, and according to our battle scorecard, today's winner is VXUS from Vanguard. And our judges agreed for the most part in most categories across the board. The lone exception was performance, where LVHI did shine. But at the same time, our judges brought home the point, and I think they hammered it pretty well, that these are two different strategies completely. It's like apples versus applesauce, apple juice, whatever, apples versus bananas, whatever you want to call it. But LVHI, as our judges explained, is a much smaller portfolio, under 150 holdings, compared to VXUS, over 8,000 holdings. My goodness. And so that's a huge difference right there. And of course, the VXUS includes emerging markets. That was a big point that our judges made. And LVHI, of course, contains those lower volatility international stocks. It's a multi-factor strategy, hedges currency risk, as pointed out by Mike. But both judges doing a great job in really breaking down today's battle. One other thing, too, mentioned by James, VXUS, higher trading volume, which means tighter spreads. So that's just something else to keep in mind. But overall, solid work as usual. Thank you again, James and Mike, for your timely insight with today's International ETF Bash. It was fun.
Thanks. Enjoyed it.
Yeah, that was great.
Be sure to visit the description section below. We've got research links to our judges. And while you're there, check out the link to our program sponsor, Direction. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you next time.